Today, we will talk about operational efficiency for financial institutions. As I said before, our presenter for today is Mr. Zach Colborn, Solution Consultant at Radian. Zach, please start your presentation.
Hi everyone, thank you Zoran. Thank you everyone for joining our webinar today, Operational Efficiency for Financial Institutions. As Zoran mentioned, my name is Zach Colborn and I'm grateful to be your speaker today. Just a quick introduction to me before we get started on our main agenda. I'm dialing in today from the Philippines, where I've been living for the past 2 years. I was born in the UK, so sorry about the accent. I hope you can all understand me today. And as well as the Philippines, I call Australia home. For the past 6 years or so, I've been working for financial inclusion, largely across the Asia Pacific region, including Tonga, New Zealand, Myanmar, and most recently, the Philippines. As Zoran mentioned, I'm now a solutions consultant with Radian, where I help financial institutions to improve operational efficiencies by identifying areas where they can improve and building a roadmap for change. Working for financial inclusion is important to me personally because I believe that everyone deserves the same financial opportunities that I've been afforded, having access to things like a bank account for savings, access to credit and insurance for unforeseen events. I feel privileged to speak to each and every one of you today. I know all of you are leaders in your own communities and part of this global ecosystem of building financially inclusive institutions. I believe that having these kinds of conversations, particularly during unusual times like these, can help lead to that. So thank you once again for having me, and I'm happy to continue this conversation after this presentation. Zora, next slide, please. To set some expectations, let me just briefly walk you through the main points that I'm going to cover in my talk today. The first is the value of operational efficiency, particularly for financial institutions today. I'm going to briefly touch on the dimensions of operational efficiency for financial institutions. And in the last part of my talk, I'll discuss a little bit more about what I do as a solutions consultant and share briefly some simple steps to start your way on this roadmap towards continuous improvement, operational efficiency. My talk today is titled Operational Efficiency for Financial Institutions, but what it's really about is trying to answer the question of how we as a community, an ecosystem, can work together to serve our communities more effectively with responsible financial services. At Radian, our goal is to reach 100 million families through technology and partnerships, but we can't do this without you. So again, thank you for being here. Zora, next slide, please. The drive for financial inclusion, as we've seen over the past couple of decades, has really demonstrated that there's a large underserved market of people demanding access to financial services, and that this market can be profitable. Globally, there's around 1.7 billion people who are unbanked. In the Philippines, it's around 50 million people, which represents around 70% of the adult population. Now, this is both a huge challenge, but also an opportunity for those that are ready to grab it. More recently, we've seen this with the growth of competition in the financial sector at an increasing rate. And with that, the demand from customers for better products and services delivered in faster and more convenient ways. As this landscape is continuously evolving, operational efficiency has been increasingly essential, not only for growth, but for survival. The times we're in now, the COVID crisis, it's uncharted territory for all of us. It's emphasized the importance of operational efficiency and brought to light the necessity of future-proofing our financial institutions to serve customers in new ways. It showed us which institutions have prioritized operational efficiency by embracing technology, and the ones that have become better equipped to survive this pandemic, and the ones that still need to rapidly adjust their methods now. At the high level, operational efficiency, as I've mentioned, has meant growth and resilience for financial institutions. But taking a closer look, I've seen this coupled with increased happiness for all stakeholders, from boards and senior management telling me they're happy because they no longer have to wait 2 weeks after end of month processes for financial data. They can view it in real time now from their phone or tablet. To operational teams, happy that they're spending more time with clients and searching for new ones, rather than filling out and reviewing paper documents. I've seen back office teams happy that they're no longer spending long nights and weekends at the end of the month consolidating data. But ultimately what this means for our customers, it means that they're enjoying better and financial services. Happiness is something that we all need right now, and this is something that I want for everyone here. Next slide, please, Hans. And the next slide. Applied to the financial sector, operational efficiency broadly means delivering financial services to more people, faster, per unit of resources, whilst maintaining high quality services and valuable processes. Importantly, this isn't a state, but a process of continuous improvement. It's not somewhere we get overnight, but it's a journey. Often we don't know what's ahead of us or how to get there. When I started working with a small pen and paper based traditional microfinance institution in 2014, I had no idea what the future looked like. Since then, working with Aradian, I've been fortunate enough to work with dozens of financial institutions, many of you here in the Philippines, of different sizes and stages of this journey. Through this, I've seen what's possible now by embracing technology and the mindset of continuous improvement. Next slide, please, Hans. So now that we've briefly discussed the value and dimensions of operational efficiency for financial institutions today, the question really remains, how do we identify these opportunities? And more importantly, build a roadmap for continuous improvement. There's a very simple process and set of principles that I use when working with financial institutions of all shapes and sizes. Next slide, please, Hans. I'm sure all of you are familiar with this basic framework for change, but it's good to remind ourselves of useful tools sometimes, and these 3 steps are something that I always keep top of mind. In building a roadmap, it's firstly really important to know where you're starting from, where you are right now. Then it's important to decide where you want to be. Where do you want your road to lead? And perhaps more importantly, planning how to get there. Next slide, please, Hans. In order to be improving, you need to know where you're starting from. For each of the dimensions of operational efficiency, speed, scale, and quality financial services, it's important to be clear on where you currently stand. And asking questions is important here. For example, for dimension 1, to reach more clients, you need to know how many clients you currently have. Going a bit deeper, to improve, it might be necessary to ask more questions like, How many clients are we currently serving per loan or credit officer? How many clients are we serving at each branch right now? Who are we currently reaching? Are they mostly male, mostly female, under 20, over 40? Are they living in rural or urban areas? What types of businesses do they have? What types of products are relevant for them? And which types of loan products or savings products are most popular? Why? For dimension 2, for example, to serve clients faster, you need to know how long it currently takes to serve customers. For example, for loan processes, loan origination, from loan application to disbursement, how long does that currently take? Digging a bit deeper, it might be useful to ask questions such as, how long does loan origination take per loan type, per loan officer? How long does the application take for clients to complete? Why does it take this long? How long does the approval process take? Why? What are the current steps involved? For dimension 3 of operational efficiency, to maintain quality service and processes, to know where you are, you need to examine your current processes and service more closely. Asking questions like, what's the current level of client satisfaction with your services? What's the daily activities of operational teams? When a client walks into a branch and applies for a new loan, what are the steps that they need to take? Are these important? What are the steps that loan officers need to take, or our tellers? And what are the steps for our back office teams after that? To make a deposit into a savings account, what options are available? What options are we providing our customers? Which are currently being used? Which are the most popular? Is there any double handling of information, double encoding in 2 different systems maybe? Or is there double collection of data along your process? Finally, you need to have an accurate picture of your financial position in real time and assess resource input for each one of these processes. Before we move to step 2, it's really essential to answer as many of these questions as possible. If any data essential to decision-making is missing, then we need to acquire this data, and that should be prioritized. Quality data is really key to improving operational efficiency. And most importantly, it should be relevant information. It should be timely, and it should be accurate. Next slide, please, Hans. In order to have a plan, you need to know where you're going, and you need to decide where you want to be. So goals are absolutely essential. Once you've collected all data and information during step 1, you can start to ask questions like, well, how many clients should each of our loan officers serve? What's a good benchmark? What are some realistic goals based on our past data and current experience? How long should our processes take? How long do clients want these processes to take? Which types of products should we focus more resources on? How satisfied do we want our customers to be? Next slide, please, Hans. Now, in order to get where we want to go, to reach our goals in step 2, we need to have a plan. And the best plans come from having detailed and valuable information found in step 1 and clear goals that we defined in step 2. For example, if you know how efficient your staff are, through some key performance indicators, how many clients they serve, how quickly they're serving clients. You might plan as a next step to observe a little more closely how your highest performers are operating, and use these insights to train the rest of your staff up to the level to improve everyone's efficiency. Often there's enough data internally and success stories to make good decisions, but you need to have the tools to extract and analyze that data effectively so that you can make relevant plans. Sometimes for real innovation and change, what we've seen is that looking externally for help and success stories is really useful and often necessary during this process. For example, when I discuss cloud-based core banking as a potential solution for some of these operational inefficiencies that I see and how we've helped other financial institutions, I often get asked questions like, okay, so with your cloud-based core banking technology, how do we do our end of day process? How do we do our end of month process? How long will this take? Now, with traditional on-premise core banking systems, because data is not stored in a secure and centralized location often, that can be accessed through cloud technology, it's often necessary to have these processes, these end of day processes or end of month processes. Having an end of day cutoff time, for example, reconciling transactions, manually booking accounting entries, and then data is often backed up and stored on external drives. And this might be consolidated at a head office, for example, for a monthly financial report, but this comes to senior management 5 days or longer after month end. And when I tell teams that actually none of this is necessary with cloud technology, that they can have consolidated real-time data available at any time, I'm often met with a look of confusion. They often don't realize that these time-consuming processes that have existed in microfinance, rural banking, for so long can be automated with new technology. To conclude, financial inclusion really demands that together we're building strong, resilient financial institutions and systems for the future. I hope that my brief talk today has left you a bit more curious and hopeful than ever before about serving communities more efficiently, and some insights into how we can start our journey and the steps we need to take to get there. Beyond this, I'm always here to discuss specific solutions and help. And Hans, on the next slide, I think, will be my contact details. I'm happy to be contacted at any time. And with that, I'd like to open up for Q&A if anyone has any questions.